Well, good morning then, everyone, as we head into European trade on Tuesday, the 15th of August. We'll start with the headlines. We'll have a flick across what is going on over the course of the night. PBOC, the People's Bank of China, cut interest rates unexpectedly overnight, trying to lend some more support to the economy. They have announced stimulus measures towards targeted sectors of the economy. They tried to prop up the real estate sector, the construction sector. They have also tried to prop up the tech sector. Now they are cutting interest rates in order to boost economic growth in the country after a faltering economic rebound post-COVID lockdowns. Now, a lot of it's probably due to the fact that they kept those COVID measures for so long, and when the rest of the world was experiencing a relatively strong growth, the Chinese missed out on that, and now that interest rates have risen globally, growth is not that strong globally, then they go and open up their economy and try to boost growth, and it just hasn't really had the follow through that they may have expected. So they have announced stimulus measures, as I just alluded to. Now they have cut interest rates, all in order to boost up their own economy. So it should be a positive for Chinese stocks. I'm just looking at another screen. Haven't done too much over the course of the evening so far, over the course of the night so far, and the Chinese yuan has reached a 9-month low, and that uptrend continues, which is obviously a downtrend in the Chinese. Mixing up my words. It's obviously a downtrend in the yuan, but an uptrend in dollar yuan. So something to keep an eye on going forward. Cutting interest rates in order to boost economic growth, but you'd expect the stock index to rally off of the back of that, and has not really materialized by any stretch of the imagination. So if stocks can't rally off the back of that, that is certainly not a positive for the Chinese stock market. You can see Asia stocks stuck as rate hikes, as rate cuts. Ring China alarm. Again, it's just another showing of their economic slowdown. They have to do things to boost the economy, and it kind of reaffirms that. So, is that enough for markets really to boost markets and pick markets up? Certainly, stock markets over the course of the night so far do not think that. I'd have to imagine that in order for stock markets to pop higher off the back of that, they probably have to do a little bit more, or else you would have seen stocks rally off the back of that. But apart from that, I haven't really got too much yet to go off. Oil nudges up as China cuts policy rates to support economy. Obviously, the Chinese being a large user of oil, a large consumer of oil. You can see oil, both crude and Brent, slightly higher in the overnight session, but you can see stock indexes relatively positive across the board, but they're also not really up by that much. The Euro stock is up 0.39%. Apart from that, though, everything's less than 0.3. Some are still pretty flat. So they're green, but not exactly green with any sort of aggressiveness. US stocks pretty flat. Yields continue higher. Certainly US yields continue to trend higher, which is interesting. It has not relayed itself in massive US dollar strength or stock index weakness, and kind of reaction that we have been seeing in recent months from a yield move, which is interesting, but not much coming off the back of that, which we'll have a look at once we get around to some charts. But Japanese yen lower across the board off the back of yields being higher. That uptrend in dollar yen continues, and you'd have to imagine it does continue as long as these yields continue to push higher. But Australian dollar, relatively positive, but it's still pretty flat. The highest any of these currencies are up is 0.2%. You look down across the board, Japanese yen is the weakest currency on the day, but even that minus 0.3% is the highest amount any of them is down. So sterling up slightly off the back of positive wage growth. Wage growth matching inflation in the UK, so maybe a bit of a turning point in terms of the cost of living crisis. It's positive for the majority of workers within the UK economy, but pretty flat across FX, pretty flat across stock markets, pretty flat across commodities. You can see copper flat, gold, silver flat, Bitcoin, Ethereum flat, yields slightly higher, the dollar flat, global yields pretty flat. Not really a lot for us to go off in terms of the overnight session, which we can see across here. Again, relatively flat across the Aussie, Kiwi, Euro, and Sterling. Sterling has had that pop higher off the back of the wage growth, but dollar yen through the highs again in recent trades since 7 a.m. Something to keep your eyes peeled on, with these yields continuing to pop higher. So dollar yen is the trade off the back of yields higher. The longer yields continue higher, the longer dollar yen continues to trend higher. That is a pretty guaranteed correlation at any time. Stock index is just a bit of a mess across these, isn't it? You can look at the S&P, the Dow, the Nasdaq, the Russell. Okay, the Nasdaq having a bit of a pop higher yesterday, which was nice, but really not a great deal to see on any of these. With the DAX, the Euro stocks, the FTSE slightly lower, but I mean it is still trapped in a recent range. So be interesting to see if we do get through these lows on the FTSE. Strong wage growth means that the Bank of England can keep the foot on the gas in terms of interest rate hikes. Bias probably lower from Friday into a sideways day yesterday. Do we continue lower over today's session? Maybe a little bit tricky. And the VIX is pretty sideways, so just a lack of clear direction across all these asset classes, apart from yields, which is driving dollar yen higher and continues to drive gold lower. And I think gold through these lows here doesn't seem a bad bet. Below 1900, if you just blow up this chart a bit, you can see the trend is quite clearly down. Maybe a move down towards these lows across here at about 1893 would not be completely out of the realms of possibility. So something to keep an eye on. The things to keep an eye on today will be yields, dollar yen, and gold. Apart from that, we are lacking clear direction across any of the other assets, and by saying dollar yen, I mean the yen crosses as a whole. Sterling yen might be a good one. You got underlying Japanese yen weakness. You've got sterling popping higher off the back of those strong wage growth figures. It does make a recipe for sterling yen to want to look higher. You can see the unemployment rate rising slightly, which markets haven't really cared too much about. They look at average earnings, including bonuses, up 8.2% from a consensus of 7.3. 8.2% is now above the rate of inflation over the last month. So markets haven't really cared too much about the unemployment rate. A slight uptick in that isn't too much of an issue, judging by how markets have reacted. That average earnings, including your bonuses, is up a pretty strong beat, a strong increase from the previous month, a strong increase on consensus. Markets have taken a bit of positivity from that. Other things of note today: Canadian CPI and US retail sales. Now I think Canadian CPI is one thing to keep an eye on, but obviously retail sales, you've had strong economic data out of the US. You expected retail sales to tick up higher, up to 0.4%. Now a beat on consensus, and this would be a further positive number in terms of US data, which would go in line with the picture that we have seen across US data recently, and that would play into the central bank's thinking at their next meeting in September or even November. So the more positive economic data that you get, the more leeway they have to keep the foot on the gas in terms of their interest rate hike. So, yields pushing higher, potentially off the back of that. Do they continue higher in today's session with a beat on retail sales? It's probably where the better trade comes from. Apart from that, you do have CPI in or out of Canada. Now, CPI, you've had a number of CPI prints from a few different countries remaining a bit sticky at CPI. The headline figure pop higher in the US from consensus was 3%, came up to 3.2. Sorry, the previous was 3%, came up to 3.2 with a consensus of 3.3. So it was slightly lower than consensus, but inflation did still tick up in the US. Now, if you can get a few other countries following suit and inflation starting to pick up slightly again, more countries that happens to, more negative that is going to be for markets. So let's see how that plays out at 130. But in terms of the Canadian dollar, central bank is seemingly done their interest rate hiking cycle. Or if that comes in above consensus, that puts rate hikes back on the table, or potentially back on the table, for the Bank of Canada. So main focus of attention today will be that Canadian CPI, as well as retail sales. A couple of strong figures there will probably get us the best of movements. Apart from that, not really out of note over the course of today. Into tomorrow, we've got some inflation readings out of the UK into the minutes, and tomorrow evening. But we will cross that bridge when it comes to it in tomorrow's video, and we'll touch on it a little bit later on in today's pre-US video. But things to watch today: US yields. Off the back of that, then you naturally watch dollar yen, which brings the yen crosses into play, and then gold as well. Off the back of movements in yields, let's see if they can continue on into the rest of today's European session. Stock indexes and the US dollar across the board, not the easiest to trade in recent trading sessions.
5 minutes to cash open, which coincides with our candle close, and let's